Welcome to our accounting class. Today we'll be looking at the notes to the financial statements, but we'll only be focusing on note number 3. As you can see on the board, I have my structure for my fixed asset note. So this is note number 3, and we are dealing with fixed assets. You will remember that your fixed assets are made up of your land and building, vehicles and equipment. But for this example, we're going to focus on one asset, which is a vehicle. So your structure is like this. It is divided into 3. You have your beginning of the year, you have your during the year, and you have the end of the year. So what is happening at the beginning of the year is we are looking for the cost price of this asset. What was the original cost price of this asset? And then what is the accumulated depreciation at the beginning of the current year that we are working for? And then when you say cost minus accumulated depreciation, you will get your carrying value at the beginning of the year. Then we move to the movements. The movements is everything that is happening during the year. So you can either add an asset or dispose an asset. What do we mean when we say you are adding an asset? That means you are buying an additional asset. So the additions, they are always recorded at cost. So this is an additional asset at cost price. You record it at cost price. Then disposal. You decide to sell your asset. So when we record the disposal, we always record it at carrying value. Then we move to the end. The end is similar to the beginning because you say cost at the end minus accumulated depreciation at the end. It will give you your carrying value at the end. So that is the structure of your fixed asset. Now, let me give you an example. Let's say that we have at the beginning the cost price of a vehicle. The cost price is 100. It's 160,000. And then the accumulated depreciation is 56,000. This K is standing for 1,000, okay? And then now, they also tell us that at the during the year, maybe they say on the 1st of September, 2023, they bought an additional asset, additional vehicle, and it was 100,000. 100,000. And another thing they can tell us is that they depreciated their vehicles at 10% on cost price method. On cost price method. So this is the information, and we have to put our information on our fixed asset note. So at the beginning of the year, the cost was 156,000. We take the cost and put it here. 156,000. What was accumulated depreciation? It was 56,000. So we take the 56,000 and put it here. Remember, we said the cost minus accumulated depreciation, it will give us our carrying value at the beginning of the year. That's why I'm putting my accumulated depreciation in brackets to show that we are subtracting. 156 minus 56 gives me 100,000. So that means the carrying value of my vehicle at the beginning of the year is equal to 100,000. Now, let's move to the movements now. The movements were saying, what are the additions? What asset did I buy during the year? So we said on the 1st of September 2023, we bought an additional asset for how much? For 100,000. So I write, remember we said additions at cost. So you put it at cost price. And they told us that this asset was bought on the 1st of September 2023. So assuming that our year, maybe it ends here on the 28th of February 2024. This is our year end. So now when we want to depreciate our assets, we want to see how long does this asset stay with us. We bought this asset on the 1st of September up until the year end was 28th of February. So how many months did we keep this asset with us? So it was September, October, November, December, January, February. So it has been with us for 6 months. So when we calculate depreciation for this asset, we are going to say 100,000 multiplied by the depreciation is 10%, multiplied by 10%, multiplied by 6/12, because it was only with us for 6 months. So 100 times 10, which is 10,000, times 6/12, it will be 5,000 rands. So that is the depreciation of the new asset. We write our depreciation here. Depreciation. So for depreciation, we already have 5,000 for the new asset. But remember, when you calculate depreciation, you must have 3 depreciation. And those 3 depreciation are for SAN. This is for sold asset. And in this case, we don't have a sold asset. So we have O and N, old assets. That means we have to calculate depreciation for this old. Old asset is 156,000, and then we calculate 10% because it's 10%, which is 15612. So it's 15,600. So we are going to add it here. 15,600. So that is our total depreciation. So our depreciation is for the old asset, which is 156 times 10%, and it's also for the new asset, which is 100,000, but it was only with us for 6 months, so we depreciated for only 6/12. So it is 5,000. So now you have to add what is 5,000 plus 15,600, which is 20,600. This is your depreciation. There is no disposal. Remember, disposal means to sell. We did not sell any asset. Now, let's come to the cost at the end. How do we get the cost at the end? Remember, we have the cost at the beginning, which is 156. We also bought an additional asset. So the cost now at the end will be the cost at the beginning plus this additional asset, which is going to give us now 156 plus 100 is going to give us 256,000. Now let's do the accumulated depreciation. So accumulated depreciation will be the accumulated depreciation at the beginning plus this depreciation during the year. So it's going to be the 56,000 plus 20,600. We're going to have 600 here, and then 6. It's going to be 76,600. Now, what will be the carrying value? Remember, every time you're looking for a carrying value, you say cost minus accumulated depreciation. So you're going to say 256 minus 76,000. So if you say this minus this minus this, you get a 0, 0, you get 4. 15 minus 6, you get a 9, you get a 7, there's 1. So your answer is 179,460. So if you say 256 minus 76,600, you get your carrying value at the end, which is 176,460. So that is your fixed asset note for vehicles. So the important thing is to know how to get like your carrying value at the end and your cost and your accumulated depreciation. You must also be able to calculate your depreciation. So it's important for you to know that SAN formula. You have to calculate depreciation for the sold, for the old, and for the new. Thank you so much.